Stardust Solar is a North American franchisor of residential and commercial solar and renewable energy installation services. With record revenue, its first ever EBITDA positive quarter, along with strong growth in its margins and to its record backlog, CEO Mark Tadros is here to discuss the quarter and an outlook for 2026. I'm Martin Gagel with Market Radius Research. Please remember this is neither a recommendation nor investment advice. Mark, welcome and congratulations on a solid quarter.
Hey, thanks for having me again, Martin, and thanks for the kind words. Q3 was the largest in company history, and I'm happy to report we've crossed into EBITDA for the first time on our quarterly results.
Why don't you just go over the quarter, just a few key highlights, give a quick overview on the quarter so people would know what we're talking about, and then we can dig into a few things.
Sure, my pleasure. So yeah, let's start with revenues. Q3, we finished with 1.78 million IFRS top-line revenue. It was the highest quarter in the history of our company and represented 99% growth year over year from Q3 last year. And I'm really proud to say we operated at a 44% gross margin. Now that gross margin is a trend we've been carrying not just for the quarter, but year to date. And that's really encouraging for us. We had last year probably about 35% gross margin. So the operation seems to be growing in terms of profitability. And that led to, as I mentioned in the opening, our first ever EBITDA positive quarter. You know, this is something that we've been chasing since the inception of our business 10 years ago. And we've been communicating to our investor base that this is the direction we're going in. You know, the model for Stardust Solar, I've said it many times, a scalable franchise model that becomes more profitable the larger it becomes. And we've just reached that tipping point now where we're starting to produce, you know, an EBITDA positive quarter, and that trend will continue into the future. So looking into 2026, we're hoping the entire year of 2026 will produce EBITDA, and maybe we'll talk about that in a bit. But back to Q3, another really nice note that we had on our quarterly reports is that we've narrowed our losses on the quarter to just $25,000, which resulted in a loss of 0 cents per share. So again, we're able to show the share value to our shareholders. Operating expenses were up slightly, but that and only 14%, but that's a reflection of the growth of the company. Furthermore, we strengthened our backlog. I think that this was another really important note for everybody to recognize. In Q3, we signed a record $2.55 million worth of new contracts that got added to our backlog. When we reported back at the end of Q3, we were looking at $4.4 million in backlog of sales. Today, I can tell you we've worked through that a bit, and the number is closer to 4 million as we head into 2026. And what your listeners should know is that gives us a great starting platform for another growth year in 2026. Furthermore, our cash position improved. You know, the last time we met, we talked about Q2. There was a lot of discussions about cash and receivables, but I want to highlight the reason our cash position had been, you know, reduced in Q2. One, it's the busiest time of year, so we're in field spending a lot of money to make projects turn. But two, most importantly, we had almost completely eliminated all of our loans and borrowings on the company. So we used our cash to eliminate our debt. And if you go to the balance sheet today, you'll see that there's very, very little in loans and borrowings. I think only 80,000 on the statements we put out. And that again sets us up for EBITDA going forward. You know, we had these large interest payments that we had to make on a quarterly basis based on loans we had historically, and those are gone. So that'll create an even more profitable business model as we go forward. Finally, I think another really nice piece here is that we had a positive of 131,000 in operating cash flow. So when you look at the actual operations of our business, Q3 clearly demonstrates that we've moved into profitability. The shares are at a 0 cent loss, and now our cash flow statements are moving into positivity as well. So all healthy signs coming out of Q3.
remarkable improvement you've shown through the year. Well, it's relatively simple of your franchise model that you're operating. There are several stools on that leg. You get your franchise fees when your existing franchises sell systems. You get a piece of that, and then you've got also maybe, I'm not sure how many people are aware of your training side of your business. So I don't know if that's three. Maybe there's some more legs to that stool, as well as some, I believe, with some licensing things. Can you talk about the different aspects of the business, maybe a bit of on those margins and how those various sides are progressing?
Stardust, our classic business model, generates revenue three ways. The first is through training and compliance, which was the original, foundation of our business. Now, that part of the business model operates at about an 80% gross margin, but only represents, I would say, maybe 10% of the total revenue pie. Now, we've made some advancements there, and we've moved a lot of our training for 2026 towards our LMS. So basically, we're going to be taking a lot of our in-person training, moving it online, and we're converting all of our training resources to subscription-based model going forward. It's not exactly a royalty, but it's reoccurring revenue. And you're going to find in our discussion today, this is a reoccurring theme as we continue to refine the business model and we move towards more of a royalty platform or a reoccurring revenue business long term. And the second way we make money is franchise fees. We've talked about this many times. It's really the growth story of our company. It's the number one pillar of the business in terms of scaling. And that part of the business operates at 100% gross margin. And that's reflected through initial franchise fees, which are now $50,000 upfront to buy a territory, plus a 5% royalty in perpetuity on all the revenues that franchise makes. So those franchise fees, initial fees, royalties are all 100% gross margin and now represent 20 to 25% of our total revenue pie. And then finally, the third leg of our business is products and services. So all of our franchisees, our network, are mandated to buy all their solar panels. Every rail, every inverter needs to come from head office. Now, that pool of products and services, engineering services, represents about 70% or 65% of our revenue pie and operates at a blended margin of 25% across all SKUs. So when you put those three, legs of our business together, you get a company that's going to do just about $5 million in revenue this year. And again, operating at a 44% gross margin.
You talked about your backlog at 4.4 at the end of Q3. That's like almost like three-quarters of a year worth of revenue based on like you're growing. What is that? Can you give? I don't think you're giving specific guidance, but for Q4, let's say, should we expect Q4 to be somewhat similar or better than Q3? Can you give us some sort of directional
Right.
perspectives on what the coming quarter should look like?
Sure. So no, it'll be to a lesser scale, I would say. So Q4 is not historically a large quarter for us. Q3, Q2 are always going to be our biggest quarters. We are a seasonal business, and it's natural. As we head into winter and the weather gets a little bit worse, we're able to execute less and less projects in the field. So no, I
Yeah.
don't expect Q4 to match Q3, but our gross margins should stay stable. And we're hoping that next year, as we get into Q1, that backlog feeds a really good start to the year. Another really important note for your listeners that I want to clarify. So backlog represents all the signed contracts that we have in our system that are not completed. It doesn't necessarily represent the revenues that hit our financial statements. Some really quick
Okay.
math is usually about 50% of the backlog will turn into actual revenues. And that's through, the three legs of business that we just talked about. So the backlog is the total of the signed contracts we have coming to be completed.
Those are the signed contracts your franchisees have signed. So if a franchisee books something, $100,000 contract, let's say, for a number's worth, you would only that would all show up as backlog, but then only a portion of that would end up coming through as revenues for you.
That's correct. That's correct. And
Okay.
those revenues are, the equipment sales, which can be
Yeah.
50% of the entire project. It's going to be the 5% royalty, and it's also going to be any engineering that the franchisee needs to get their projects prepared. So, I said 50% as an easy number, an easy math number, but it's really
Yeah.
probably more like 60% of that backlog turns into revenues for head office.
Okay, but I think the important point is that not all of it, because I was actually under the
Correct.
impression that that 4 million would all flow through you. Gotcha. That's a great clarification to have.
Sure. My pleasure.
All right. It's been a wild year for in the solar space specifically, in all of trade and so forth. The U.S. was going to be a big portion of your business. It's a substantial portion of your franchisees. A lot of tax incentives and things are going on in the U.S. How and there's, I guess, end of year push for U.S. solar installations to get done to get their tax rebates or their tax incentives associated. How is that looking? And do you have any perspectives you can give us on what your USA side of the business is going to look like in 2026, if not specifically, just sort of categorically, how things are shaping up down there?
Sure, sure. There's no question that the administration came in, removed the tax incentives. It's hurting the overall industry in the US. However, I still see a lot of opportunity. And at our company, we're not going to stop the growth in the US, and we're still getting plenty of demand from new franchisees that see the long-term value of solar energy. So I think you'll still continue to see growth in the US. It might not be as hypercharged as it was when the incentives were there, but long term, and especially in the sunnier states of the U.S., it's a no-brainer. Homeowners down there are able to install solar on their home and get their investment out in less than 7 years sometimes. So the economics of solar work, that's what's really driving the industry. It's really nice to have tax incentives and big push from government, but the economics of solar work everywhere in North America, and that's what's driving the adoption as we move into the future. One other thing I've talked about a few times is the demand for energy. And that's really what we're solving at Stardust Solar. The coming demand for energy from new technology, um, you know, AI technology, cryptocurrencies, robotics, electric vehicles. There's going to be this huge, overwhelming demand on the grid to produce energy. And rooftop solar is the perfect subsidy for that demand. It'll alleviate the demand, and it also creates energy independence at the building level. So that building is now independent of the grid, able to produce its own energy, creating a really sustainable environment for the grid. It won't be overloaded, and it gives the capacity for the grid to then turn around and sell the excess energy to these technology companies, these data centers that absolutely require it. So, that was a little long-winded, but it's a really important note to look at what's driving the industry is not necessarily incentives. Now, as for the outlook on the US, as I said, we continue to grow there organically and through M&A. So we're currently exploring two acquisitions, and I won't provide too much detail on these because they're in negotiation stage. But what we've found is the volatile market in the US has given us a lot of opportunity to acquire assets at sometimes 25 cents on the dollar because people are looking for support in the tumultuous times. So we see it as a bullish time to get assets in the US, valuable assets, and eventually, when incentives do come back, I think the US market will come roaring back for solar.
In one of your news releases, I thought one of the more interesting things you mentioned you had sold a franchise location in Zambia. I think it's
Ah,
Zambia.
yeah,
And I wasn't expecting that. Um,
sure.
so that's great. Obviously, there is a global opportunity for your model here. Could you maybe talk, I don't know, specifically about that franchise in itself? Is that just a one-off, or is that an indication of more things to come? And where else could you possibly have opportunities globally in the coming quarters and years?
Yeah, I love it. Thanks for that question. Yes, you're correct. We sold a franchise in Zambia, Africa. As well, we did sell a franchise in the Caribbean, in Antigua and Barbuda. So it's become, and these folks found us. We didn't go looking for the business, but it became very apparent to us that we can expand globally very, very quickly. And again, as we continue to scale up our franchise model in the US and Canada, we will now also look internationally at different markets that we can get the brand into, create some penetration, and drive alternative sources of revenue. So, 2026 has a lot of exciting things coming for Stardust Solar. One of them is going to be the development of these international franchises. We're currently looking at a few projects in Zambia that would change the face of our company. As well, we're looking at a commercial deposit that we can work on in Antigua and Barbuda. And what I mean by that is more of a commercial installation, I should have said, not deposit. But what I'm saying there is we have a warehouse and we're actually able to bring in container loads of equipment in the Caribbean and service all those islands. Now, the exciting part here, Martin, and I think what you're touching on is the fact that solar doesn't just work well there because of the solar resource, but the grid, is in its infancy, if you will, and energy is
Yeah.
extremely expensive. So when you put solar in those environments, it's a win-win. It's a great win for the grid, but it's also a win for those homeowners or business owners that are able to produce energy from the sun at a very small cost relative to what they pay for energy from the grid. So yeah, lots of international opportunities. We will continue to pursue that. I don't have any other international franchises to announce today, but we get opportunities coming in weekly from all corners of the globe. We got a request from Australia last week. We've seen Saudi Arabia has requested a franchise. Those opportunities didn't work out, but there's continuous inbound globally for a Stardust Solar franchise.
And what I like about your model as well, you consolidate purchasing power and you get some of that, the licensing fees on that. And as the bigger you get, your purchasing power increases. And then that's more value and scale you can help add to those franchisees, along with the training and the engineering and all those various aspects, right?
Exactly correct. And, that's classic franchising 101, economy of scale. The more you're able to buy, the more you negotiate, the lower your prices get, and you distribute those savings to your franchisees, making us more competitive in the local markets, growing the entire system. So that's literally the foundation of why people franchise their businesses. It's economy of scale. It works very, very well for us in solar as well.
We've covered a lot of territories. I think we've gone through my list of questions. Is there anything I haven't brought up that you think is noteworthy?
Well, if you don't mind, I'd like to just give you a soft outlook on 2026 and what we have coming as
That'd be
we
great.
come to the end of the year. So 2026 should be another growth year for us. I went through the financial statements going all the way back to 2017, and there's this reoccurring growth that we're getting every year. It's a solid 40 to 50% growth year over year, not just to the history of our company, but really reinforced in the last 5 years since we've launched our franchise model. So if we continue that growth trend, we'll be aiming to get just around 7.5 million top line IFRS revenue in 2026. And that is the tipping point for us to move into annual EBITDA. Now, this is the ultimate goal for short-term goal for our business is to enter into an annual EBITDA position. So how are we going to achieve that? Okay, there's a few ways. One, we're going to add between 20 and 50 new franchise territories across the world. Probably most of those will come from North America, but that organic growth of our franchise network will in turn scale up all the other legs of our business and reinforce a larger royalty stream coming back to the company. This is a concept that I'm going to start introducing, and we're going to talk a lot about into the future of Stardust Solar. We are moving and refining our business model into more of a royalty play. And what I mean by that is It just happens to be the fact that all of these different legs of our business generate some type of royalty or reoccurring revenue. So a lot of 2026 is going to be about refining that model. The first part is through franchising. We're going to scale up. We're going to add 50 to 20 new franchises, grow the franchise royalty there. Furthermore, we're planning to increase our sales of our local franchise territories through some more aggressive direct marketing, direct sales campaigns. We did a test pilot in 2025 in Sudbury using door knockers and direct sales. And the result was a territory that went from 400,000 in sales in 2024 to 1.5 million in 2025. Now, that pilot proved to be fruitful, and we'll be deploying that same strategy across our next top 10 franchises in North America. So that should also boost the amount of sales that each of our franchisees are doing. Again, growing the backlog, the revenues coming into head office, and the royalty stream. Furthermore, as I mentioned, I think at the beginning of the call, our education, training, compliance platform is moving towards more of an LMS offering, and that is going to be moving to a subscription agreement as we go forward rather than in-person classes. Now, that does a lot of good for reducing cost and expenditure on our side, but it also creates another stream of reoccurring revenue. Now, you got to remember, we have 2,500 people that have historically been trained through our training platforms. All of those folks are now going to get an opportunity to jump onto our subscription model long term, and we'll continue to update our materials and their certifications on an annual basis to ensure that subscription is providing value and keeping them up to date on the latest technologies. Furthermore, we're also looking at a few pieces of technology. This will be on a smaller scale, so it's not going to have an impact. But we have a partnership with an EU company that's creating a solar energy optimizer, a company called MarkieDroid. We have exclusive rights to distribute this item across North America. And without getting too technical, the point of this device is it's kind of a brain for your solar array, your batteries, and your home. And it does a lot of energy arbitrage to make sure that you're getting the best value out of it. Now, the reason I bring that up, and again, this is in beta. We're just beginning. We haven't made any sales in that department. Those are to come in 2026. But the reason I bring it up is the revenue model there allows us to go get a royalty on the additional energy savings from the homeowner. So if the homeowner was saving $100 with their regular solar array based on production of sun, and now you add this device and just easy numbers, they're now going to be saving $150. Well, we'll be able to collect 25% of that additional $50 as a royalty back to head office. Now, of course, you install 100 devices. It's not going to be a huge royalty stream, but you install 10,000 or 100,000, it becomes very impactful over the life of these solar arrays, which is about 25 years. So that's another piece that's coming in 2026 that'll add to our royalty streams. Furthermore, we've expanded into commercial development. I might have mentioned this in our last meeting, but we've started doing commercial projects. We've added the expertise, and this has given us the ability to now go out and get commercial jobs on top of the residential. So we have a commercial package that we're going to be launching, lots of marketing and a big push to go get commercial clients across Canada and the US and globally, and that'll create a new revenue stream for the company. And it also gives us the opportunity to start taking a peek at utility scale projects. Now, we're not there today, but we're moving towards that. And once you get to that scale, you're now able to get royalties on the energy of those utility scale projects. So the story I'm telling here, or the picture I'm painting, is that long term, we've recognized that we're in this energy business, solar energy business, that's creating a lot of reoccurring revenue and royalties. And we're going to push for that as we optimize our business model. I think what our investors will find is that as we grow and move into profitability and create long-term royalty revenue for the company, becomes a very, very safe investment for people getting involved in Stardust Solar.
And with commercial, that is where your franchisees would sell a solar system and a battery energy storage system, and that to a commercial building, a factory or whatever, throw the solar panels on the rooftop, and that would subsidize their commercial electricity usage. And I don't know, that seems like a smart place to do business and a good opportunity for growth. Do I have that right there?
Yes, your description of commercial projects is correct. And historically, it was probably, 5 or 10% of our total projects were commercial. As we move into 2026, we expect that number to grow to 20 or 25%. Now, the other nice thing, Martin, about the commercial projects is we have an opportunity to offer a PPA, a power purchase agreement. And again, coming back to this royalty stream, it's where we're able to actually get rights to earn revenues from the energy that's being produced by the solar panels. Now, there's complex loan agreements there where a business owner would go on term to have the installation done. But as we move into the commercial world, we're going to be exploring PPAs. We'll be talking a lot about power purchase agreements in 2026. Again, going directly to the energy source and being able to get a royalty long term on that energy.
And it's quick, the fundamental model on that is the commercial operator wouldn't pay for the system up front, but they would pay it through a long-term power purchase agreement. We're going to pay 10 cents, whatever, and then we've got a fixed thing. We didn't have to put up the capital for the unit up front, and now we've got some good value priced electricity for the next long period of time.
Exactly right. I probably couldn't have said it better myself. That's the proper arrangement for a PPA. We'll find
Yeah.
a lender who will come in and finance the project, and ultimately will share in that energy savings and be able to generate revenues for Stardust through the energy.
And that, so then you get a piece of that long-term PPA, so it's not a one and done thing. It's
Correct.
the one and done plus a long-term renewable royalty or revenue stream.
Exactly. So in this case, we would be the ones providing the equipment, selling the equipment for the project. There'd be a
Yeah.
financier there, and then long term, we'd get a small percentage of the revenues generated from that energy.
All right. That sounds like makes sense to expand into that side of the business as well. All right. We've covered a lot. Have we now covered all the key topics? Or
Yeah, no, I think so.
all
Again, I
right.
really appreciate this opportunity. We're also refining our team. There's going to be an announcement coming up. We've added a new VP of Finance as we move into the audit season. And we're really optimistic for 2026. We're optimizing our business model every day. We're improving and optimizing our team. And 2026 is going to be another growth year for Stardust Solar. So thank you, Martin. I appreciate this time, and I appreciate all your listeners.
Thank you for the time. Congrats on a solid quarter and happy seasons to you as we come to the end of the year. Cheers.
Likewise. Thanks, Martin. Bye bye.